Hey guys, Kevin here. What I'm gonna do right now is I'm gonna quickly show you an approach that you can actually take advantage of when you're trading, right? So this is gonna essentially consist of um, identifying patterns on the 1 hour chart or even the 30-minute chart because um, this is going to be for day trades. Okay, now I have to say this, I'm not a financial advisor, so whatever I say when it comes to stocks or when I'm buying something or when I suggest an idea, um, don't hold me accountable if you, let's say, lose money, whatever. I'm just here to show you my thought process and how I do things. So without further ado, let's do this. So we traded CRM today, and just looking at this on a 1 hour perspective, or let's go to the 4 hour perspective, right? You can kind of see that we've been in this range for a while, right? You can even start it here, right? We were in a range where we couldn't even, well, of course we first broke this range right here, but we kind of fell back into it. So just first off, when you find a range, right, that's actually a very, very good thing to see and to look out for, because ranges usually, almost always break out either to the downside or to the upside. And you can always take advantage of the move that it makes when it comes to the breakout, right? In this particular example, right, I just wanted to show you the range real quick. If you move on to the hourly chart, right, you can see the range more clearly, right? You can see that for the past 2 days we've been like inching all the way to the top of the range. So we were almost about to break out 2 days ago, and even yesterday. Right now, here's the thing: if you look at the price action from the past 3 days, it actually created a pattern in itself. Right, let's go to the 30-minute. So you see that there's an uptrend here. Okay, on the 30-minute, you can see that there's an uptrend here. Right now, if you were to create a pattern here, okay, you can clearly see that there is an ascending triangle. Let me have to make it a little wider. I'm going to remove this. Let's go to the 15-minute. Okay. So you see the uptrend here, okay? You want to look at the uptrend, and then you want to look at what happens after the uptrend. Now, you can see that there's clearly an ascending triangle here. If I'm just trying to make it so that it looks really, really clear. So 4 hours. There you go. Okay. That's an ascending triangle. Okay. An ascending triangle is when you have an uptrend that essentially goes into a consolidation period. But when you're looking at the consolidation period, you see that the buying pressure is slowly increasing, meaning the price is slowly going up. Okay. So we have that consolidation period. And when you want to look at ascending triangles, you have to look, these sellers have to stay, essentially, they have to stay kind of stagnant, right? You have limited selling pressure here. Okay. It's not the selling pressure that you see on an ascending triangle. It does not push the price too much to the downside. That's why it creates that flat top, right? And the slanted bottom on this end, right? So this means that the buyers are pushing the price up, right? And it's getting closer and closer and closer to where the sellers are. And the sellers, right, they're just there, right? There's not enough sellers to push the price down, because if there were sellers to push the price down, then this line would turn into this, right? It would go like this, and the buyers would turn into this. It'll end up being a triangle, right? But that's not the case. Okay, in this case, you have the sellers who are essentially, there's not enough sellers to push the price down, so it creates that flat line. So when I was looking at this, I was like, okay, there's a clear ascending triangle on CRM. And if you look at the 15-minute, right? I was looking at this and I was trying to see when, when this would essentially break out, because as you can see, like I thought, it might have broken out here or here, but it ended up breaking out right at the open. Okay. Now, how do you trade the open? Okay. Now, in this case, right, you want to wait for the price to essentially break above wherever the top of the line is, of the pattern is, where the sellers are, right? Because when it reaches the top here, for example, if you look over here on the left, you can see that yesterday we essentially tested the level, but we didn't have enough buyers then, right? We had enough buyers today. Okay. If you look at the 15-minute price action, right, you can essentially use a 15-minute strategy in order to uh, execute this trade in the most peaceful way possible, meaning like, you're not too anxious, when you enter, blah, blah, blah. Now, if you watched my past videos, right, you would already understand that I stress using the stochastics the most, right? So what is stochastics oscillator? Again, I'm gonna reiterate the meaning of stochastics oscillator. What it essentially means is a shift in momentum, right? So if you're looking at this, the red line, right, you can see that we had a little bit of like just the selling pressure here that you see, right? What this causes is it's causing a bearish outlook, right? But it was still within the pattern. Okay. Now, when you see the shift, okay, you see the shift, then you should automatically think that, okay, maybe there are buyers now who are sort of interested in the stock, right? Now, after the shift, you can see buying interest, right? You can see a lot of buyers here before the market even opened, right? Who were interested in, pushing this price, pushing the stock back up. So if you're using, when you're about to enter, you don't want to just keep staring at the 30-minute, right? I'm using the 30-minute to kind of gauge what's happening in a 30-minute perspective. Okay. When you see this, the buying pressure start building right before it breaks out, right? That's when you want to shift to the smaller time frame. You want to shift to the 15-minute. Okay, what's happening on the 15-minute, right? As you, if you've already known, if you already know the stochastic strategy that we use, right? If you don't know it, we have a class for that, whatever. I'm not here to promote my class. I'm just here to kind of show you guys how to do certain things. Now, the best way to trade a pattern like this, right? Obviously, you can essentially enter right before the breakout, right? That way you catch the momentum up. But it's obviously, when you're trading anything, right? You don't know what's going to happen, right? You never know, right? The only way to to know is to get in the trade, and then you'll find out, right? But the most important thing to always stress is essentially risk management and risk to reward, right? What is the risk to reward on this trade, right? Where is the next, for example, where is the next resistance after this breakout, right? So in order to find out the next resistances, if you can't find the next, like for example, right, after this, like if I'm looking at the past week, right, I can't find a resistance level from the last week, right? So what you want to do is you can just go on the 4 hours, right? You go on the 4 hours and you can see. So if you look at here, right, there was a resistance here. So this is just an example on how to set, like, for example, how to set profit targets, just so for risk to reward purposes, you have a better peace of mind. So now that I have this line, right, you can essentially, right, make your risk to reward area, right? When you're creating risk to reward, you just have to find where the next resistance is, which is essentially your next, essentially your next profit target, right? that's what your profit target is, your next resistance line, right? So if sorry, thing is bugging, whatever. So in this case, right, you can essentially say this: I'm gonna risk this trade, right? But my stop loss area would essentially be, let's say your stop loss area is here, right? Let's say you're using the bottom of the candle, the opening candle, as your stop loss, right? And then you're making the next resistance to where you entered, that will be your profit target, right? Now, you have two different boxes, one small, one big, right? You want to make the small box red, okay? If you don't know what this red means, this means that this is your risk area. Okay, this is what you're risking. As long as it stays in there, you don't want to cut yet, right? You're only going to cut if it goes below your risk area, right? So now this big box represents your reward area, right? So now this is what you're risking to make this, right? This is what you're risking. This is what you can potentially make, right? So in this case, if your first profit target on CRM was 186 and your entry was 183, right? You're essentially risking what? What is the risk to reward ratio in this picture, right? So you're risking 1 to make what? 2, right? So it's a 1 to 2 risk to reward ratio, essentially, right? So when you have these risk to reward ratios down, okay, what this does is it gives you that peace of mind. Like, you know how a lot of people have trouble, they don't know when they should take profits, they don't know when they should do this, they don't know when they should do that. But now when you have the risk to reward down, you can kind of, you can lay back and say, okay, I'm gonna wait until it gets up here, right? The best way to kind of capture a whole move, right? Because a lot of people have trouble holding on to their position, longer than usual, because, sometimes when you have a history of losing, what you end up doing is you're going to cut your profits earlier than usual, because you're like, oh man, I'm so used to losing. Let me just take this profit before I lose it again. Right? That's a lot of people's problem. So when you have risk to reward, you're cutting that out of the picture, right? The best way to do this is if you have more than one contract. If you have more than one contract, then you can have an approach where you say, okay, once I'm up 30-40%, right, I'm going to cut one contract out. And what I'm going to do is I'm going to let the other one run to where the next potential profit target is, right? This way you don't cut into all of your profits. So there's literally like so many ways you can go about this, right? And it depends on you. Okay, now this is all that I was going to show you today in terms of a trading system that you can actually apply to your trading. I have a lot of videos that you can look through that has different ways to trade the 5-minute the 5-minute candles, whatever, day trading, swing trading. I have a bunch of videos on that. So I just wanted to show you guys my thought process on this, which was obviously just a simple pattern recognition and simple resistance, right? The stochastic cross, and obviously you always want to look at the volume, how the volume's reacting as it breaks out, right? So yeah, that's all for today. I hope you guys enjoyed the video. Make sure to just like the video if you liked it. If you have any comments on it, if you learned something from it, drop a comment and whatnot. But I hope you guys all enjoy your day.